Have you ever looked at a small semiconductor company and thought, what if this is the one everyone ignores? Until it's too late. That's exactly why today we're talking about Navitas Semiconductor, ticker NVTS. While most investors are focused on giants like Nvidia and AMD, some smart money is quietly watching a much smaller company. And if just a few things go right over the next 12 months, NVTS could surprise a lot of people. But here's the twist. The biggest reason NVTS could explode isn't even the one most investors are talking about. Stay with me because reason number 1 is important, but reason number 5 could completely change how you look at this stock. Before we begin, remember this isn't financial advice. Always do your own research before making any investment decisions. Let's start with the first reason. Artificial intelligence is creating massive demand for better power chips. Everyone talks about AI GPUs. Very few people talk about what actually powers those GPUs. Every AI server uses huge amounts of electricity. As more AI data centers are built around the world, companies need faster, cooler, and more efficient power systems. That's where Navitas could have an advantage. The company develops gallium nitride, also known as GaN, and silicon carbide technologies. These materials are more efficient than traditional silicon, helping reduce energy loss while improving performance. If AI infrastructure spending continues growing over the next year, companies like NVTS could benefit from demand that many investors may still be underestimating. But AI isn't the only growth story. The second reason could be just as powerful. Electric vehicles are still expanding worldwide. Every EV needs efficient power management for charging, battery performance, and energy conversion. As automakers continue improving charging speed and efficiency, advanced power semiconductors become even more important. If Navitas keeps winning business in this market, it could open the door to significant long-term growth. And here's where things start getting really interesting. Now let's move to the third reason. This is something many investors overlook. Navitas isn't trying to become successful overnight. Instead, the company is focused on building partnerships. One customer becomes 2, 2 becomes 5, 5 becomes 10. That's how many successful semiconductor companies have grown over time. Every new design win or commercial agreement increases the possibility of future revenue growth. The market doesn't always react immediately. Sometimes these announcements barely move the stock. But all it takes is one major contract or one strong earnings report for investors to completely change their opinion. And that brings us to reason number 4. The company's size could actually work in its favor. Unlike trillion-dollar chip companies, NVTS has a much smaller market value. That means it doesn't need hundreds of billions of dollars in new value to produce impressive stock returns. Even moderate revenue growth combined with improving profitability could attract much more investor attention. Of course, there's another side to the story. Smaller companies are also more volatile. Good news can send the stock sharply higher. Bad news can push it down just as fast. That's why NVTS isn't a low-risk investment. It's a growth stock with both exciting opportunities and real risks. But the biggest reason is still ahead. Reason number 5 could be the one that changes everything. Wall Street may still be underestimating what Navitas could become over the next few years. This isn't just about today's revenue. It's about where the company could fit into tomorrow's biggest industries. Artificial intelligence, electric vehicles, fast charging, renewable energy, industrial automation, modern data centers. Every one of these markets needs more efficient power technology. If Navitas continues executing well, investor sentiment could shift much faster than many people expect. Now imagine this. A few months from now, the company reports stronger than expected earnings. Management raises future guidance. Another major customer is announced. Suddenly, the same investors ignoring NVTS today could be rushing to buy tomorrow. That's how many explosive stock rallies begin. Now here's my personal opinion. I see NVTS as a high-risk, high-reward opportunity. If the company continues improving, execution and market conditions remain favorable, I believe a move into the $8 to $12 range over the next 12 months is possible. If multiple positive catalysts happen together, an even bigger rally can't be ruled out. But if earnings disappoint or demand slows, the stock could remain under pressure. That's why every investor should manage risk carefully and never invest based only on hype. Now I want to hear from you. Do you think NVTS could become one of the biggest semiconductor winners over the next year? Or is there another chip stock with even more upside? Leave your prediction in the comments. If you enjoyed this video, don't forget to hit like, subscribe to the channel, and turn on notifications, because the next stock we cover could be tomorrow's biggest winner.